Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis.
Hey guys, it's James with the Chart Guys. It is Tuesday, March 7th. I'm going to do a quick rundown of oil. So oil on the weekly here is lost the 8 EMA here at the close of last week. And it's the first time it's lost it in multiple weeks after getting above it on this big green candle here. And if we have further downside on tomorrow's inventory reports and break the low of previous week's candle of 52.54, we could be seeing a TCG bear cross where the 4 EMA crosses under the 8 EMA on the weekly. And that is a big red flag for oil bulls because, as you can see on the weekly, whenever there's a TCG bear cross, there's further downside to be had. This is a little bit skewed here, but you can see for a lot of times that you'll see further downside right when the cross happens. So that's something to watch out for the oil bulls, and you can see how big these drops can be when these TCG bear crosses happen. So it'll depend on the inventory reports tomorrow. If we do lose the 52.54 level, then we have the low of the 51.22, and that'd be a big red flag, as that's really setting a lower low on the weekly. We do have the middle Bollinger Band support on the weekly, which is currently at 51.28. And if you look at the monthly, longer term, what we have going on right now are inside candles. So we have the high and low of this candle, and then last month's February candle is in the range of the high and low of this candle. So something to watch for is, again, the break of the 51.22, which coincides with the weekly that I was showing you here, the low of this candle, 51.22. That's going to be a big red flag for the bears, and likely losing that will lose this 20 MA weekly that's moving up. On the daily, same thing. We've been in this range, like the monthly candles show. These inside candles, we've been setting this high and this low, and we've been setting higher lows and lower highs here. So what bears want to see is a break of the low of this candle first at 52.54, then confirmation break of 51.22, and again on the monthly candle, inside candle, that's going to be a big bear break on a longer term time frame. On the hourly, it was a nice play set up this morning that I pointed out in the commodities room. And what I was looking at this morning, let me zoom in here. What I was looking at this morning is that oil was setting higher highs on the hourly and higher lows, and it was coming up to this key hourly resistance, 200 MA resistance. And what I was noticing about the RSI was that it was getting overbought, and so I alerted the chat room that there's a possible day trade here in getting in short on oil, and that worked out really great here. And looks like at the end of the day close, we had an hourly inside candle here, where the range of this hourly inside this candle is in the range of the previous candle, and you can see it broke it bearish. I'm assuming that the API oil reports after hours was bearish. So tomorrow, 10:30 a.m. Eastern Standard Time, we have oil inventories. Oil is going to look different after that. We'll see if we get a bear break or a bull break of this weekly candle. here. And again, first clue would be the break of 52.54, and then big confirmation of break of 51.22. What oil bulls want to do is to close back above this 80 MA here and try to stop a TCG bear cross from happening, and that is currently at 53.19. So we need the week to close at 53.19 for oil bulls, and for oil bears, you want to see a break of this, of the low of this candle by the close of this week for a really big confirmation. And again, with inventories tomorrow, everything could look different. So, oil's been in this tight range. It's been in no man's land, and there are better trades out there when it's just consolidating and finding equilibrium where it's setting higher lows and lower highs. So we'll see at 10:30 Eastern Standard Time what happens with inventory reports. Have a good night, and I'll see you guys tomorrow.